Good morning, guys. Welcome to this Tuesday, June 2nd. Sorry about yesterday's wrap up. That didn't work out well. Yesterday was kind of a crazy day. I don't know. That was just crazy. Not the market wise per se, but it's a lot of stuff happened on Monday. So anyway, so I missed out on that one, but it's back again, back in action. And the market is pretty much holding on pretty good. Um, Overnight, no, not much action to drive the market. It started off to the downside kind of day. Caught my eye for a bit, but it never took out this 75 support area. And it's pretty much holding just in a holding pattern right now. The news we have this morning is pretty much non-existent. The only thing you have is job openings at 10, couple of speakers, but that's about it. So we're pretty light on news today. Tomorrow we get more news on Wednesday. And of course, on Friday, we get employment situation. That will be a bigger deal. So right now, light on news. Market is still very much in the move out of the middle to the upside mode, extending to the upside. We never really get to that stage three. They keep grinding it high. We kind of got there for a little bit here, but a few days back, and then immediately start taking us higher again. So we barely get to settle in before they take it higher. So this just builds up a big big potential for a correction is what it does. And you can see here, I mean, we spent some time right here around that 7,400. That was good. That's consolidation. Another leg higher. But overall, we haven't really spent a lot of time. You can see we have been going pretty good from that 7,000 level. So 600 points to the upside, pretty quick. And so far, the market is still very much in the mood to trade this higher, and they can. So we're just going to stay range bound, trade it from the long side of the market. We're getting into the summer months, so the volume is going to lighten up a bit. And that eventually we're going to get some sort of a correction going. I mean, it happens when it happens, but I mean, probably not, maybe not in June, but it's in the time frame June, July, August, September, maybe into October. It's like a 4 month period, but usually it tend to be August, September, where we get a bit of correction. Last year wasn't much of it, but it tends to be volatile in that area. So I would just stay positive that June or maybe even to July is going to be net to the upside, not too much crazy stuff going on. Then maybe August, September, be a little bit more concerned. But right now, it looks to me like the market is trying to trade higher. So stay on the long side or favor the long side. Look to buy weakness, at least for today's trading, 75, 75.95, 75.75 for rotations up. One level outside that obvious is going to be 75.55 for rotations up. I would probably take off my long bias below that 75.75 and go back more range bound. But it's one level below the obvious would be the last one. And below that one, I would be a lot more concerned about the short side. So you're looking at right here, that's 75. So a pretty nice little area right there. So if I mark that up as well, the way up like this, that's a pretty good area to pay attention to. On the pullback, below that one, 75, 10 to 12. It's going to be the next big support area. And thereafter, it's going to be 74, 50 to 60. And so following along on the F1 here with the areas, it looks like they're creating some congestion. And on the way up, looking to sell against strength. I think that mode right there at 60, 76, 10 to 12 would be pretty interesting. The 76 20s, 76 30s for rotations down. With a bit of caution, I think a move up here to that mode, 76 12 would be an interesting potential quick short, a little scalp there. First time to that mode. But that's pretty much the only thing which kind of sticks out to me. Otherwise, the 76, 20, and 30 potential short setups there, but not necessarily anything I would be very aggressive on. So what I do is I just wait for them to see what kind of direction they're going to take in the morning. I know if they start taking it higher, I'm looking for these levels. If they start taking it lower right from the get-go, well, you're just looking at the lower levels. And you're looking for early strength, early weakness. Right now, I would favor early weakness. So a little bit of weakness right from the get-go usually give you a pretty good opportunity for a long setup. Now, in a bull market, when the market tends to trend higher, Usually you get the early morning weakness, a little sell-off thing from the get-go, and then the buying kicks back in. And in a down market, you get just the reverse. You get more of a little early strength dynamic, and then you get weakness afterward and start selling. So that's kind of the the things to watch for. Right now, I'm still seeing early weakness working pretty well, unless it turns into more of a range bound day where they just go lower, then higher, then lower, and then back and forth, and end up just sitting, twisting in the wind. But early on, we usually get that early weakness, a little bit of strength, and then we'll see how they want to develop going into the afternoon. On the Nasdaq, same story there. And Nasdaq is also extending the AI trade is absolutely nuts. I wish I held on to my Micron and my old stuff. I had ARM and I had Micron for like probably like 2 years back, and they were not doing nothing. I was just absolutely dead. I sold them, and right now the late in the AI trade. I mean, ARM not an obvious stock because that's a different kind of a play, but the my memory thing, I kind of missed out on that one. I never bought back into the Micron stock early on, but that would have been that was not a hard call to make to try to get in on that one. But that's absolutely it's up to $1,000 now. It used to trade like 10 times. It's 10 times higher right now. You should trade around 100, $150, and even that, but now it's up to 1,000. So. Anyway, the that is what's driving this tech rally. These crazy revaluations and stuff, and I think it's somewhat is probably a little bit overdone. I mean, like in memory chips, regular memory. I mean, I bought a 4 GB little flash drive for like $250 4 or 5 months ago, and now that same drive is like $800. It's like what? So yeah, it's just memory prices. So that's going to change. I mean, that's going to come down pretty hard as soon as they get some more supply online, and I would expect people working pretty hard to create that supply. And I think those high flyers are going to be short-lived. One because it's more of a commodity, that memory. So that's a little sidetrack for you, but that's what's driving this. So I mean, these little short squeezes, or you get like a lack of memory drives those memory makers like sky high. Like a chips here, like drive down sky high. So yeah, you can be in for it's going to be a pretty volatile summer. In for some interesting runs. And if you get on one of those runs, I mean, yeah, I would be putting some analysis behind it as to how their long-term viability. So I think like companies like Nvidia, which has intellectual property, which is really hard to duplicate, they're say a lot safer than the people who provide more commodity kind of stuff like memory or disks or storage, which is not as hard to replicate if you wish. Anyway, so that's like 2 cents on that one. Stay on the long side though, same on the Nasdaq. Look to buy weakness. On this guy, we have the congestion area right here, like there. Little volume edge right here, and then I haven't nothing obvious here. That there could be something here, it's a little bit too early to do. So I would just stay on the long side. Let's see how far they want to take this. Look to buy weakness against the 30,500s, the 450s, 390 to 400s, 320s, 270s for rotations up. The 270s and the 220s here, that's when we need to start shifting our bias. So that's going to be down here, this edge I just drew up. That's kind of what that's at. So if they start taking out some of those support areas, I think something is going on. We may have a correction day in front of us. But right now, stand alongside, look to buy weakness. Or short opportunities against the 580s, 590s here, and the 690 to 700s for rotations down. And a bit of bunch of caution. Any short setups, I'm not going to be very aggressive on that. You do get good rundowns throughout the day, but I would treat those as more as scalp trades, an opportunity. And if you end up with a scalp trade turning into a bigger trade, just be happy about it. You know, I wouldn't expect those or try to trade it very aggressively because technically In a move out of the middle, they'll be running you over more often than you'll be right on that. Better to look for that early weakness, look to buy against these support areas, the 500s, the 450, 460s, the 390 to 400s, the 320s, down to the 270 and 220s here for rotations back up. So that's the ES and the NASDAQ, still staying on the long side. We'll see. I saw some of these software companies, ServiceNow, for instance, they went from $100 to $135 now. That's like a 30% increase in 5 days. That's how crazy it is. That's a big company too. It's not a small company by any means. Anyway, so looking at the bond market, and they are back up again. Trading a little bit higher, up here to the 113s. The 114, the 113.20 is an attractor, or the mode there. The mode on the F1 is up here at the 116, mean at 115. So that's kind of, they actually moved up in the distribution a bit because the volume is spreading to the downside here. They're getting more volume on the lower end. As you can see, I would say that we now have another edge to look at on the F1. It's going to be down here. So that edge down there is worth watching, the 109s. Right now we are pretty much trading in a range right at this edge at the 111, 15, 16. Just holding that edge just barely. So I would just stay range bound on bonds. If anything, I would stay range bound right now. If they start taking out this area, the 113s, I would be leaning in on the long side. If they start trading below that 111th, I would start leaning in on the short side. So we have that 2-point range, 111 to 113, where we had to figure out what these guys really are trying to do. So, but I would start off range bound, look to sell strength, 1230 to 113s, 1305 to 6. We're going to buy weakness against the 112, 22, 24s, 16 to 18s, 112, 12s for rotations back up. So that's kind of the range I'm looking at. Maybe up to 13, 10, 11, depends. But we'll see if they get that far. But looking for short setups against those. If they take out the 113, I would be more inclined to lean towards the long side, but still looking for a couple of short opportunities against these immediate resistance areas. It's hard to when they're trading right at that edge there. I would not be surprised if you get probes up and down this area. So just because they break out to 113 doesn't necessarily mean I'm just going to buy everything, but it looks. I would still be looking for short setups against that 113 5 to 6 and the 113 10 to 12 here for rotations down. Thinking that as you can tell, most of the day ranges we have are not at less than a point. I mean, yesterday was a pretty good range day, and they were down at the 19, 11, 19 up to the 12 19, so a full point. So that's pretty much the range we get, one full point, which is not a whole lot, but it's so you have to be really particular about your entries. All right, so that is where we are. So I would stay range bound on the bonds, same as usual. Watching that 113, see if they're going to get some traction to the upside. On the crypto side of things, I just took with that one oil trade. Didn't go anywhere yesterday. I didn't do anything more after that. But it's kind of watching it still. Hasn't been moving. Haven't been paying too much attention to it, to be honest with you. I've been kind of stuck with some other stuff. Right, back to the ES and the NASDAQ. And these guys are kind of where we left them. So holding pattern, twisting in the wind, that's where we are. And I would just, on the ES and NASDAQ, be traded from the long side of the market to get started. Bond market range bound right now. If anything, if they take out the 113, I would be more inclined to look at the long side there. There you have it. We'll get started there. And the job openings at 10. That's about it. So see you guys back at 11:30 for the next update. All right, guys, later. All right, good trading, by the way. Good trading. And then later.